Hey, what's up? Dennis here from primetraders.com. Now, it's been a really long time since I made an actual video, about 4 months, but I've actually spent a lot of valuable time working on creating a really special video for you guys. Now, in this video, we're going to be going over the 11 things you need to know about technical analysis in Forex trading. Anyway, let's get started. So, you already must know what technical analysis is in Forex and stock trading. And I'm sure you pretty much will agree with me that technical analysis is the best used tool for profitable trading, because when used correctly, it can actually significantly increase your chances of a successful trade. Now, when you combine sound principles and processes of technical analysis with actual risk management, and of course have that right mindset, you pretty much have a recipe for success. And I'm talking about major success. The best way to be profitable in the markets is to have small losses and big wins. And technical analysis can actually help you with that. It will basically help you to create good risk-reward ratios by looking, or by allowing you to look at important price levels and patterns. It can also help you to place a trade in the direction of least resistance for a much better chance of catching a solid trend. Talking about trends, very recently we released a pretty cool post on pipsmatter.com. Head over to the blog and you'll see a lot of very important information about trend trading and an excellent explanation of us pretty much making about 20,000 euros in one trading day on Bitcoin. And we're talking about CFD trading, not buying physical Bitcoins, but actually trading the price. Anyway, when it comes to technical analysis, everything else is just opinions and predictions, as you will soon very, very well understand. Before I get into the actual video, or before I continue the actual video, here's a really nice quote that I created today. Technical analysis can be both an art and a science. Or let's do this again. Technical analysis can be both an art or a science based on how you use it. Just never believe it's a crystal ball. Otherwise, you're pretty much an idiot. And I've witnessed this with many people who get onto trading. I've said this story a couple of times already. I have a friend who started trading, well, not one, a couple of them. They all start trading, and they have that beginner's luck phase, which many people have. Probably 80% of the people who start trading, the first couple of trades are winners because they're random. It's a random outcome and they get lucky. And I had this friend of mine who said, "Oh my God, I think I've got a sixth sense for the market." Well, if you think you've got a sixth sense for the market, the last 4 words of this quote are for you. Or let's say the last 3. You're an idiot. As simple as it is. Technical analysis can be both an art or a science based on how you use it. Just never believe it is a crystal ball. Otherwise, you'll always be an idiot. And idiots lose money in the markets. Okay, now let's begin. Number 1. So remember, we're going to go over 11 very important things you need to know about technical analysis. Number 1 is this. There are 2 types of technical analysis. Predictive technical analysis, which tries to see what the market will do in the future based on the current patterns on the charts. And second is a reactive technical analysis form, which actually uses current signals in price action to find buying and selling decisions, to actually create good risk-reward ratios and go in the direction of the trend. I am a mixture of these two because I do use patterns, but mostly I actually trade just 2 specific patterns. That's what I teach in the Prime Traders community. 2 very specific patterns, the contraction and the continuation. That's all I focus on. And then I use momentum, key trading levels, and candlesticks to determine how I react to the charts. Number 2, technical analysis is not magic and it is never 100% correct. Remember that. You cannot bet everything on a head and shoulders pattern because it could turn into a channel, could turn into a fake out. Nothing is 100%. If you can take anything from this video, take the first words of number 2. Technical analysis is not magic and it is never 100%. It is basically just a way of looking at price action to see current patterns and future probability and the future probabilities they present. Now, keyword here, an emphasis on probabilities. That explains to you, the word probabilities explains to you that it's not 100%. There are many scenarios every day, and never will you ever trade the same pattern or the same trade ever in this world. Number 3, support and resistance levels only matter in trading ranges. Once there is a breakout in one direction or other horizontal areas are invalidated, uptrends have no long-term resistance and downtrends have no long-term supports. So once these levels are broken, you don't know where the next resistance is unless you're trading very short term. And that's what I love trading. The upcoming videos you guys are going to be getting are all about that. They are direct videos of examples of key levels breaking. I'm actually in a very nice trade in gold right now, which has broken a key trading level. It has created a continuation pattern. It has broken out of it, and I'm pretty much 10 lots into that trade. More on this later on. Number 4, in a trend, support and resistance can go from horizontal to vertical, and that is when moving averages and trend lines come into play. Number 5, moving averages can be a great tool for trading trends, but can become very useless in trading ranges and high volatility markets. And by high volatility markets, I'm talking about kangaroo markets, where price action goes up and then down, up and then down, up and then down, in a range or out of a range a little bit, but back into the range. That is a kangaroo market, and it's a very dangerous market to trade. Number 6, if you believe too much in an asset's narrative or become too bearish or bullish, it can create a cognitive bias where you only see what you want to see on a chart. And that, my friend, is a recipe for disaster. Our solution at primetraders.com to this is to always trade what you see. We'll talk more about this soon. Number 7, overbought and oversold indicators fail to be meaningful in parabolic trends. A strong trending market can keep becoming more and more overbought or oversold as price goes on, and you can just keep selling that, but it'll just keep going up. You'll never know when it's overbought or oversold. That's why I stopped using the RSI indicator. It's useless to me. Number 8, technical analysis is not the same on different time frames. You can see very different patterns on intraday, daily, weekly, and monthly charts. So it is very important to focus on the time frame you trade and focus on those specific indications. If you trade on the 1 hour chart, make sure you check the 4 hour and the 10-minute, 30-minute, 45-minute charts so you can kind of gauge the idea of where price action is going. If you're trading on the daily chart, then just focus on the 4-hour chart, the 8-hour chart, the 1-day chart, the 2-day chart. You get the drift. Focus on those terminals that are more closer to the actual time frame you're trading to understand what's going on a little bit better. We're almost done. Very short video. Number 9, technical analysis has to be flexible, and as a pattern or trend changes, you have to change your interpretation, and that's essential. You need to be proactive towards what's going on to actually have success, to actually apply successful trading technical analysis. Number 9, 90% of technical analysis is seeing which direction a price is breaking out. The other 10% is narrative. And finally, number 11, and this is the most important one to me, most traders trade what they think, while the successful traders trade what they see. And that's what I want you to take out of this video. Start trading what you see. Spend a little bit of extra time looking at the actual chart where you find a potential trade. Check the candlesticks, check the supports, check the resistances. Really focus in on the last couple of weeks of price action, maybe a month or two if you're a day trader like me or a swing trader. And just really feel the chart, look at it, and then trade what you see. We're pretty much done, but before I let you go, I just want to give you a very quick update. We have completely updated our pricing and service list at primetraders.com. You can now join us for as little as $9 a month. And let me explain to you why this is happening. Number 1, most people who charge a lot, like hundreds of dollars for their communities and thousands for their courses. They do that because they do not have retention rates. That means that what they're selling you is bullshit. It will not provide you any kind of value. It will just make you it will just get you lost in trading. So what we decided is we make money from the markets. Let's provide people a community where they can actually learn, get motivated, get the support they need and the guidance for peanuts. Give us a try. $9 a month is the lowest account you can get, and you'll still get a lot of value. Anyway, my name is Dennis, and I'm really happy you watched this video till the end. Thank you, and good luck trading. Bye-bye now.